All right, we're live.
Good night, good night, good night. So we're doing it a little bit different this week. I'm Kurrency Meech and I'll be breaking down US 30. So starting off with news, right? We have some medium impact US news like Empire State Manufacturing Index. I'm not really expecting a lot of, I would say, sporadic movements from that, but we have non-farm employment change. We have average hourly own earnings. That's on Thursday. I think we have FOMC. That's on Friday. Yeah, so there's a lot of red folders, but it's at the end of the week, so we don't really have to worry about that when it comes on to the fundamental aspect of our trading. Now, US 30. On the monthly time frame, we are seeing, please move this window away. 1 second. Bro, you were at that? I see
Right,
something
what?
come up. Never mind. Something will
Okay.
come up on the screen, but all right.
Okay.
As well as I said, monthly time frame, we're experiencing a bearish candlestick at the moment. We still have 11 days left in this month. We had a spike all the way up to 48,430. Right? We sold about all the way down to this is 46,500, right? And then we started to buy again. So the month has been pretty volatile, to be honest, especially last week. So on the daily time frame, we are seeing the market maintaining that bullish type structure of higher highs and higher lows being created, right? So we created that high point here at the 48,500 area, right? We had a steep ass retracement. This was Thursday, Friday. Now we just started this daily candlestick. Week is fresh, so I'm not looking to take any trades until NY open. That's, you know, Wall Street, New York open. We are free to take the trades them within session because we are gonna have more probabilities or more volume during that time. Now, looking at the daily, as I said, the daily just started. We haven't really printed a lot of data as yet. But what we can see here is that we tapped our 47,000 institutional area interest Friday. We had a lot of exhaustion here. We also respected areas of exhaustion. So if I was to plot myself an exhaustion zone, I'd probably plot it from here or even here. Let me use this area, seeing that we're covering a lot more areas if we use here, because we could have used here as well, but seeing that this is covering everything, I'll just use that. So this is an exhaustion zone that was plotted on the daily that we also tapped in. We're also still above the SMA. So 4 hour time frame, we are seeing, okay, a higher low, higher high, higher low, higher high. So we're expecting the market to create a higher low point within this entire area of interest. Now, come NY open, we want to see how the market is reacting within this area, right? Because this is basically our area of interest we would want to take the buys from, right? And we can target back the 47,500 area interest. So looking on my 15-minute time frame, I am seeing where levels of support was broken up here, and this is what initiated that downtrend on this 15-minute time frame, which caused the market to sell or have that retracement that we're seeing on the 4 hour, right? So that 15-minute area support got broken. We saw where in which the market also broke the not institution, the SMEs, right? Or indicators below the indicators as well. We were creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, low point here, and we created a lower high here. So indications that I would look for the buys is probably the market failing to create new lows. So this was our last low point that was created here, created this lower high here, and we started to pull back. Now, as long as the market doesn't break past this 15-minute area support and we start to get certain rejections like wick rejections from this area, our engulfing candlesticks are we started to create areas of support here. Like let's say we do something like this. I'll be interested in taking the buys from here. Stops will be below that area of interest, right? Because that is where we don't want to see the market pushing. If the market pushes past that area and even break this, we are wrong and the market will just continue to sell. So for US 30 come New York session tomorrow at 9:30. We are expecting to see, let me clear this up. We're expecting to see rejections from this area. So anywhere in this zone, this blue zone that we have here, or at this institutional area, we're aiming to see rejections. We're aiming to see lower time frame transitions, lower time frames failing to create that bearish type trend. And we want to see higher highs and higher lows being created around this area for us to capitalize off the buying opportunities, right? So as I said before, the 15 minute is the cleanest time frame right now based off or lower time frames or entry time frames. So I would even go lower than the 15 to be honest. 5 minutes is a little bit choppy. 15 minutes, I'm seeing enough details where I can make make decisions based off what I'm seeing. As I said before, we have this low point, we have a lower high point here. We're starting that push. So we want to see, as I said, rejections from this area or failure to create a new low point below here. Once we get that, we just can go ahead and take our entry positions from, let's say, here. Stop loss would be basically below this low, right? And we can target 1 to 3 or 300 points, or we can even target back that 47,500 institutional area interest. So that is it for US 30. I'll hand it over to Pips to Payout or Terro Trades, and have a good night.
All right, thank you, guys. Thank you guys again for tuning in. Tonight we started with Kurrency Meech, right, as opposed to me starting. So that was a good breakdown for US 30 from him. All right, so let's get into XAU USD, aka gold, right? As this is what I trade. All right, so as usual, I'm going to do a top-down analysis starting from the monthly, just to get a feel of where majority of the momentum is, and then we go down to lower time frame. All right, so based on the monthly time frame, we're still seeing bullish candles, right? After each, one after the other, right? So we're still expecting buys overall when it comes on to overall, right? This candle that we're in, however, is a doji based off the major sell off in which the market did on Friday, right, to get it down to this level. I think it was right up here around, I think it was above the 4,200 level. Yeah, I think it was there before Friday, that is. But overall candle still bullish, right? We did receive a bit of, not much, but a small push, I'd say, when the market opened earlier. So let's drop down to the weekly time frame. Again, this level, let me highlight it right here. We still have a valid level of support, right? Despite the strong bullish weak rejection in which we had, we're still seeing bullish moves, right? So this weekly candle opened at, if you guys can notice, let me make it a bit bigger. It did push up a bit, right, to the institutional level in which it is right now. But we did have a lot of week. This is solely based off Friday sell-off. I was expecting it to go up, but that's what I was expecting, not what the market is doing. And we can only react, not predict, right? So this is how the weekly is. We still have this valid level of support in which we're expecting to the market to stay respectful through to and continue pushing up until we get to higher points. All right, so that's the weekly. All right, let's drop down to the daily. Again, we can notice where the market did create this strong bearish candle on Friday, right? The one previously on Thursday, however, yeah. So this was the one that sold out of the 4,200 level. And then we have the sells continuing on the Friday, right? However, what we can see now, looking on the daily time frame, is structure still being followed, right? We have a low point pushing up, right? The double bottom low point right here, in which the market formed. Double bottom low point, in which the market was resting for the beginning of this push after the retracement. So we still have that. And then we are expecting a level of support to form right here, right? Higher highs, higher lows. So this is a higher low in which I'm looking forward to, right? So basically, after the market opened, we did get a bit of push right here. Give me a second. Let me check something. All right, yeah. So basically, we did get a small push up here to this level in which we are at right now, but we can't really see the details because we only have one candle and the day just opened like a few hours ago. So not much data in the daily candle other than what we're seeing there. All right. Again, we're seeing this level of support being formed, right? Right there. On Friday, the market went down, tap in this institutional level at the 40,050, and also both of the moving averages, right? Closed right there. Again, candle open, market open. This is no wait, this was Friday. And we still have a valid level of support that is forming right here. Right? And it can be shown as well on the daily time frame. So yeah, with this wick confirming that the market wants to go higher. So let's drop down to a lower time frame. Let me go back to see if there was anything else in which we could use. All right. But however, again, so the reason why this would be risky to buy from there is we're still below a low point. And then if we're following structure, right? However, the higher time frame is saying bias, right? We still have intricate details that goes into the overall trade process, right? So we still have a previous lower low point in which the market fell below, right? So it can come up, form another lower high point, and then continue the downward trend. So what we want to see is what the market does as it regards to this level right here. Will it respect the level and continue selling off, or will it break above this level, right, to come back to form a higher low point to continue pushing up? That's on the 4 hour time frame, that is. But for now, we're seeing this right here, symmetrical triangle. Basically, let me see if this is. Yeah, so we're kind of stuck in between this right now, in which the market is moving sideways. So we might can get a break out to the upside, or the market can respect this level right here and continue with the downwards trend. So now it's just the waiting game. When it comes on to gold, not really much. Right, let's look down on the lower time frame. However, wow, so on the lower time frame, we're having these points, right? Higher lows being formed. However, again, lower highs being formed, right? It's confirming the symmetrical triangle. So what we can see, what we can wait on is what it does. If it breaks below this point, then fine, then we can wait on a next trade, but we don't want to get into anything right now with where the market is. There can be a trade in here somewhere, um, but then it could keep on pushing up, right? So it's kind of risky right now to enter, right? With the market kind of moving sideways, you know? So yeah, that's it for gold. So what I'm expecting when it comes down to this is maybe a break above, right? Might miss the initial trade for the break above to come back, retest, continue push up. Or what we can have is break below, come back to retest the same level right there, continue going below. But for now, it's anyone's game. So let's see what happens. But yeah, that's it for me, basically. Not much as it regards to gold, because not not taking a trade and waiting is also trading as well, right? It's waiting is a part of trading as a trader. So that's what I'm expecting right now, right? Yeah. And that's it for me. Thank you guys once again for tuning in. Right. Thank you, Currency Meech, for joining us again. And you guys do enjoy the rest of your week. I hope you guys make some money this week and have a blessed week.